Hi there, QuickBooks experts. I hope all is well, and I pray that as you are viewing this video that you're in the best of health and spirit. In this video, we're going to cover Chapter 7, Recording Payroll from QuickBooks Online for Accounting 2026. Upon completion of this chapter, you should be able to add a new employee, add payroll-related general ledger accounts, and pay employees and record payroll expenses and liabilities. In Chapter 6, we added some investing and financing activities. So as we know, businesses typically have three types of operations, or three types of activities rather, that they engage in. The first is operating. So this is within the normal course of operations for the business. So the things that the business does, the services that they provide, the products that they sell, and the expenses that they incur in order to generate revenue, that falls under operating expenses. And then we have investing activities. This is essentially where the company is buying long-term assets and financing as it relates in particular to corporations. This is essentially the ways in which they generate monies in order to finance the activities of the business. So common stock is one. That is essentially where shareholders, they invest into the business for a portion of ownership. And then we also have bonds, and that is where a corporation borrows money from individuals or other businesses. So in Chapter 6, that is where we added some investing and financing activities like the acquisition of a fixed asset and a long-term investment, as well as the sale of stock, payment of dividends, as well as acquiring and paying long-term debt to the Wild Water Sports Company. In this chapter, we're going to add payroll activities like adding employees, adding payroll-related accounts, and recording payroll expenses and liabilities to Wild Water Sports Company. So the key thing we know is that at the end of every chapter, we have the trial balance, which is essentially our checkpoint. So before you can move on to the next chapter, you need to ensure that your trial balance is correct. So the first step is signing into QuickBooks. I'm already signed on. And then we're going to go to our reports, custom reports, click on the trial balance for January 1st, 2027 to January 31st. I already have that pulled up here. So the first thing we always want to do, we want to verify the total debits and credits. So here I see total debits and credits are $748,065. So perfect. My debits and credits tie. But one thing we've learned is that even though the trial balance ties, that does not necessarily mean that everything was done incorrectly. There are some errors that cannot be picked up or recognized on the trial balance. So we have what's called a slide error. Let's say the transaction was for $1,000, but you input $100 or $10,000. That is essentially where a zero is either added or a zero is omitted. Then we also have what's called a transposition error. So let's see, here we have this checking account and the balance is $107,345. A transposition is essentially where we switch two digits. So that would essentially be this 107,000 would instead be $170,000. So as great as technology is, as great as humans, can be, there is still room for error. So the trial balance will still tie, but there might still be error. So just something to keep in mind. So once we confirm that our debits and credits tie, the next thing we'll do is we want to look at all of the account balances and make sure that those tie as well. So, I just skimmed through, my checking is good. Accounts receivable, inventory, payments to deposit, prepaid expenses, accumulated depreciation, original cost for the furniture, investments, accounts payable, MasterCard, sales tax payable for the Florida department, long-term business loans, common stock. So you essentially go through each of them one by one, and you want to make sure that all of the account balances tie. I already verified everything. So we close out of this. And now we move on. So in this section, we're going to add new employees to QuickBooks Online. So for businesses, they have different classifications of workers. You have what's called employees, and then you have what's called independent contractors. So for employees, you need to put them on payroll. Simply stated, you are going to be responsible for withholding federal taxes, FICA taxes, which consists of Social Security and Medicare taxes, and depending on the state that they live in, you'll also withhold state taxes. And then there might be some other deductions. Maybe there's a 401k plan, maybe there's payments for medical, dental, and things of that nature. So that is essentially when you are dealing with employees. For any of you who ever had a job, right? Let's say you made $30 an hour and you worked for 10 hours, you will not get that full $300 check. After all of the taxes, maybe you get 250, maybe 220, if that, right? So with that being said, yes, you grossed $300. However, your net pay is after all the deductions have been considered. And then from the employer's perspective, they are also responsible for matching Social Security and Medicare. So Social Security is 6.2%, Medicare tax is 1.45%. So the employer, they also need to match that. So one of the challenges a lot of times is that employers, it's a burden, to run payroll, if we're being honest, and it's an additional cost. So a lot of times what some employers will do is they will pay workers, or they would classify workers as independent contractors, because as an independent contractor, you get the full $300 gross. You are responsible for paying your own taxes. However, in the event that it is discovered that you misclassified a worker as an independent contractor when they should have been an employee, there are very hefty penalties and fines. All right. So just wanted to ensure that you understand the distinction between the different types of workers. So we're going to continue from the above. We have our navigation bar open. We're going to go to payroll. And again, this is the new version of QuickBooks Online. So typically with this new version, this is how you will see it. If we go to the dashboard, just want to make sure that everyone's on the same page. In the event that you are still seeing this older version, just open this quickly. I believe they officially phased out of the old version. So everyone should essentially see this new version. All right. So with that being said, we click on the navigation bar, we go to payroll. And then since you're just working through QuickBooks, typically is going to ask you to have one of these subscriptions. In the event, let's see here, there's a way for us to go around it. So what we'll do, we're going to skip this. So if you click on payroll, this is exactly where it's going to lead you to. It's going to make you subscribe, but you're not subscribing to anything. So instead, as mentioned, some of the things in the textbook doesn't necessarily match, because QuickBooks Online, it is a cloud-based version. They make updates just about every day. All right, so you're going to open a navigation bar, and instead of clicking on payroll, you're going to go to team. And then from there, you're going to click on employees. And this is where you're going to add an employee. So we click the add an employee text. We don't need to click no thanks because it's not asking us for live chat. So we're going to start to input the information for our employee. So the first name is Donna, last name is Chandler. And then we have all of the necessary information here. It's asking about the email. As you can see, it's a little different. So we have the first name, the last name, then it's asking for the email, which was not provided. Then it also asks for the hire date that also is not provided. So in such case, we'll just input the information here. And then after we add the employee, I'm sure that's where we'll see the information such as the address. So we'll just select add employee. And then what we can basically do is after we just input the name or the employee, we'll select edit. And then this is when we see the screen that is a bit similar to what's in the textbook. So from there, we start to input the address, 12 Ridgeway Lane, Orlando. Okay, so it doesn't seem to be coming up. Let me make sure I spelled it correctly. Ridge Ridgeway Lane. Okay, it's not coming up, so we're going to input it manually. So we have 12 Ridgeway Lane. The city is Orlando. The state is Florida. And the zip code is 32807. And then again, this is all the information that they gave us. So we just select save. Now we go back to our employee list, and then we're going to add another employee. And the name of this employee is going to be Karen Vordale. All right. And again, it doesn't provide the information for the email or the hire date. So we're just going to add the employee. And then after we add it, we are going to edit the personal information. So that way we can input the home address. So we have 1554 Rose Avenue. The computer has a mind of its own sometimes. All right. So Rose Avenue, number 4. And it's going to be Orlando, Florida. And the zip code is 32804. So we select save. We go back to our employee list and we add another employee. And this is Ryder Zakovic. And again, we add the employee and then we edit the personal information to input the address. His address is 12 Space Court. Oh, sorry, Spaceport Court, Orlando, Florida, 32804. We select save. It's confirming the address, save. And then we are good to go. So when we click the employee list, we go back and then we see we have these 3 employees. We have Donna Chandler, we have Karen Fordale, and we have Ryder Zakovic. So we added our 3 employees. So once again, if we were using QuickBooks Payroll Online, the general ledger accounts, they're going to be used to capture the payroll information, right? So typically you need to pay for a separate subscription in the event that you want to use the payroll for QuickBooks. So again, the way in which we input the employee information, we went to Teams. When you go to payroll, this is where you see there's another level of subscription. So this applies to both the marketing and the payroll. So in such case, they have different subscriptions. You can get premium, you can get core, and then there's also what's called the elite. So again, for learning purposes, we are going to use journal entries. So with that being said, even though we're not using QuickBooks Payroll Online, there is a payroll expense account and a payroll tax to pay other kind of liabilities account that's already included in the chart of accounts. So we're going to go to our chart of accounts. And then we're just going to filter. I'm just going to enter payroll so you can see. So we have payroll, wages, and tax to pay. This is a current liability. So it's broken out based on the taxes to pay, as well as the wages to pay. And then we also have payroll expense, which is broken out based on officer salary, salaries and wages, as well as payroll taxes. So in the event that the 2 payroll accounts are not present, they will need to be added, but in this case, they are already there. An employer agrees to pay its employees a salary per month or an hourly rate. In either case, for the agreed upon salary or hourly rate, times the hours worked, those amounts are going to be recorded to the payroll expense account. And then again, depending on the state, employees are often required to have an estimated amount of federal and state income taxes withheld from their paychecks by their employer. So typically when you get a new job, one of the first things that they do is they issue you what's called Form W-4. Or we live in this day and age where a lot of times it's, done electronically through HR. You'll log in. They'll ask you certain information about, are you married? Are you single? Do you have any dependents and things of that nature? So that process is essentially you authorizing your employer to withhold federal taxes on your behalf. So that's Form W-4. And as mentioned, depending on the state that you live in, there's generally a state equivalent form. I live in New York City, and there's Form IT-2104, which is the equivalent, which authorizes my employer to also withhold New York state and New York City taxes as well. In addition to those taxes, the employer also withholds Social Security as mentioned, which is 6.2%, and Medicare taxes, which is 1.45%. Also, amounts withheld from employees, they're going to be recorded in a payroll tax payable. So when you think about it, it's a liability, similar to sales tax, right? Dollar Tree. If you go to Dollar Tree and you purchase something, you need to walk with more than $1. Why? Because yes, the item is $1, but Dollar Tree also charges you sales tax. As mentioned, I live in New York, so it's 7.765 or about 8%, something like that, right? So typically stated, it's going to be $1.08. The dollar is what Dollar Tree keeps. That's their income. The 8 cents is not revenue for the business. Instead, they are collecting the money for the state of New York, and at the end of every month or quarter or year, whatever their filing frequency is, they are responsible for remitting, for giving that money to the state, right? So they're basically just like the hands that the sales tax passes through. It doesn't belong to them. So with that being said, that's ultimately what the payroll tax payable account is. It's a liability account until it's remitted to the U.S. Treasury and the state entity. Employers, as mentioned, they also match this Social Security and Medicare. These matching costs are going to be recorded as additional payroll expense. So the payment of employees, it requires gathering information from each employee, and this helps to determine the withholding amounts as well as the payroll expenses. The federal and state governments, they provide formulas, and they also provide tables to help employers calculate these amounts. So in this text, we're going to be provided with these amounts, and additional taxes such as training, unemployment, etc. They're ignored for this illustration just to make it simple, but payroll can be very complex. So since payroll is a recurring event, right? You work a job, you expect every 2 weeks or every week that you're going to get your paycheck. And if not, I'm pretty sure there's going to be some problems, right? So payroll is a recurring event. So long as you're working for that company, you expect to get paid. So because it's a recurrent event, it helps to make these checks recur, and then it can be edited for payroll changes in hours worked wherever applicable. In this example, payroll is going to be paid semi-monthly, so twice a month. And just keep in mind, there might be some rounding differences that occur in the withdrawal amount. So here we see Donna, we have Karen, and then we also have Ryder. So Donna, she is salary. It doesn't matter how many hours she works, she's still getting $60,000 a year. We have Karen, who makes $18 an hour, and we have Ryder, who makes $18 an hour. All right, so we see their situation looks a little different. Again, we have salary, Donna, and then we have Karen and Ryder, who are hourly. So in order to record the payment of the employees, we're going to do the following. So I didn't sign out, so we're still here. We are going to select our plus create, and then from there, we are going to select check under vendors. And then under our payees, we're going to select Donna Chandler. The date is going to be January 15th, 2027. The check number should already populate. It's going to be 1008. And then the category is going to be payroll expenses. And then the amount is going to be $2,500. And then from there, we tab. We're going to input payroll, wages, and taxes to pay. And we're going to input negative 533.75. And then again, as it says, be sure to enter this amount as a negative. And then from there, we're going to select payroll. Oops, sorry about that. Payroll expenses. The amount is going to be $191.25. And then from there, we're going to select payroll, wages, and tax to pay. And then we're going to input negative 191.25. So essentially, this is what it should look like. We have check 1008, the name of the employee with our address, the payment date, and we have payroll expenses for the 2,500, payroll, wages, and taxes to pay for the negative 533.75, payroll expenses, and then payroll, wages, and taxes to pay. All right, so this essentially corresponds with what we see up above. So this $533.75, this consists of federal withholding, Social Security, as well as Medicare. So when we add all of that up, this is the amount that was withheld from the employee. The employer is responsible for remitting it to the proper agencies. And then from there, we also see $191.25 that is responsible for being paid by the employer. So that was for Donna. So what we're going to do, we're going to click Make Recurring at the bottom of the screen. And then we're going to select Unscheduled. And then from there, we're going to save the template. So now the next step is for us to click our gear icon. Oops, sorry about that. Our icon. And from there, we're going to go to our recurring transactions. Let's see where it is in the list column. There we go. Perfect. So this is our gear icon essentially because it's so I'm sharing the screen, but typically this is what it would look like. But again, because it is a split screen, that is why we see it as the 3 dots. So we click the 3 dots, we click on settings, and then under lists, this is where we see the recurring transactions. And then from there, here we see use located in the action column. So let's see, we might have to scroll over. We select use. And then here we see the check is going to appear again as it did in 7.5. So it looks exactly the same. So the next thing we're going to do is we're going to input the information for Karen and Ryder the same way, but we need to make sure that each of these are unscheduled recurring events. So we're going to create a new check, save a new, and we're going to do the same thing. So here we have Karen, Vordale, the date is the same. We have payroll, expenses. And then again, if you find yourself getting confused, you can just, go through the steps again. So we have payroll expenses for the gross pay, which is $1,440. And from there, we have payroll, wages, and taxes to pay for the total employee withholding, which is a negative 307.44. Then from there, we have payroll expenses, which represents the employer's liability, which is 110.16. And then we record their liability to pay, which is a negative 110.16. All right, so we're essentially doing the same steps that we saw here. All right, and then now we see it ties the net check amount. This is essentially how much Karen is going to get. So we select make recurring, we select unscheduled, and then from there, we select save template. So now we do the same thing. All right, we can select either new, it could be a bill. We can go back to our gear icon, select check, either or, doesn't really make a difference. All right, so we select new check since I'm already here. I'll go that way. We know this is going to be unscheduled. I am going to be paying Ryder. Oops, sorry about that. All right, go check. All right, perfect. So this is going to be Ryder. We essentially do the same thing. So payroll expenses for the gross pay, which is $1,080. Payroll, wages, and tax to pay for the total employee withholding, which is a negative amount, $230.58. Then we input the payroll expenses, which represents the employer's payroll tax expense, $82.62. And then we record the liability, payroll, wages, and taxes to pay with a negative $82.62. So we see that the net pay should be $849.42, which it is. Everything ties perfect. So we select make recurring, unscheduled, and we select save template. All right, payment. Perfect. So we have these recording templates for all of the employees. So after we enter the last check to record a payroll above, we select save and close it. And now we go to our reports. So we go to reports, we go to our custom trial balance as of January 31st. All right, and then here we see, all right, something seems to be off. have to make sure that I paid everything. So payroll, wages, and taxes to pay. Okay, this is indicating that something is missing. So let's see. Probably missing one of the employees to Donna. All right, let's make sure that the others were saved. Let me see, maybe it's a date thing. All right, so I'm just gonna go back to check to figure out where my error is. Okay, the others did not save. Wowzers. Okay, so let's go back, do this again. All right, so we'll scroll back up for Karen. I made the recurrent. Oh, you know what? To make it easier for myself, I'm gonna go to my recurrent template and then set it up. So I have Karen. I'll click on this, I'll use it. Then I'll select save. Then I'll do the same thing for writer. Save. So I already have the template. So it should automatically make the updates. So I'm going to update this to the 31st. Perfect. All right. So that was my mistake. I created the recurrent template, but I didn't actually save it, hence why I didn't process. All right. So everything ties. I have my total debits and credits, the 749,520.80. And then again, you always want to go through, double check every account. I already verified that everything is good. So the next thing it asks you to do, click on the checking account. You view the transaction report. If you want to click it from all dates, and then you basically just double check all of the information to make sure everything ties. We have our 25,000 and 80,000. So this is essentially the way in which you can double check and verify that everything was done correctly. All right, so it's asking us to click on Ryder Zakovic. So I'll click on it, check 1010. And then we match our screen again, everything ties. So we're pretty much good to go. And we can X out, back to summary report. We are back to our trial balance. So now it's asking us to click the gear icon. We go to our settings, and we look at our recurring transactions. And then again, the 3 employees are here. We have Donna, we have Karen, and we have Ryder. So the fact that I made this a recurrent template, I recognize my error. And then all I had to do was go back and just used it, and it makes it easy for me. So we're going to use Ryder Zakovic. And then instead of it being January 15th, we're going to change the date to 01/31, 01/31/2027, check number 111. And then we're going to make the updates for the information. All right. So in this case, Ryder's pay is $1,134. The employee withholding is going to be a negative $242.11. The employer's payroll expense is going to be $86.75, negative $86.75. So I make the update, and then from there, I select save and close. So essentially, we use the same process for both Karen and Donna. So we're going to do the following. We scroll back up, and then now I'm going to update it for Donna. I'm going to select use. And the great thing about Donna is all we need to do is change the date, because she's salary, everything stays the same. So we select save, and we're good to go. Now, because Karen is hourly, we're going to need to make some updates. So this pay period, she was paid $1,500. The employee withholding was a negative $320.25. The employer expense was $114.75. And then we match that for the liability, $114.75. So we select save and close. So once we do that, we go back to our reports to make sure that everything ties and that all of the transactions were recorded. January 31st. We scroll down and everything ties. So now we see our payroll, wages, and taxes to pay. These are the only accounts that were impacted. Our checking account is now $99,358.88. And our payroll, wages, and taxes to pay, the liability is $2,944.66. And then we have our payroll expenses. So it's asking us to click the $99,358.88. And then from there, similar to what we did before, you essentially just review it to make sure that all of the transactions are there and we see that everything ties. So from there, you can click on any payroll related transactions that you want to drill down. And if you see any errors, you can ultimately fix them. So we've recorded 2 semi-monthly payrolls for the Wild Water Sports Company. So in this chapter, we added new employees, we paid employees, and in the next chapter, we're going to work with budgets and bank reconciliation. So this brings us to the end of Chapter 7, Recording Payroll for QuickBooks Online for Accounting 2026.